Moon Platoon, the markets are in pain. Look at exactly how the rest of the market is shaping up, and you'll be able to see that a 4% dip on AMC, as well as the fact that GME basically stayed in the pocket in that sweet spot, has been pretty standard for the week. AMC opened up pretty strong, but there is now a pretty important question. Is AMC stock a buy now? Why is GameStop's phenomenon going to trigger potential restrictions in corporate America? And finally, what exactly is the shocking data, not only in the short interest, but why are we looking at a potential a crucial cusp where we are going to be able to take back AMC? Is it a buy now? Let's ask that question first. We're going to take a look at investors.com. The main point of that is because you are now going to be able to get a perspective of the mainstream. And then you're going to be able to understand a little bit more about how to do that investment research, get on with that financial freedom journey. And if that sounds good to you, smash that like, getting us up to 2,200. Comment out which one you are on the way up there. So here it is. Going to the movies is exciting. Can it be match the action by AMC? Starting the year at $2 a share, it skyrocketed more than 36-fold to an all-time high of 72.62. Even though an epic short squeeze, people are talking about the short squeeze as if it already happened. This is the general norm. The idea is give the short interest is above 10, that 15% range, which it is holding despite a week of a slight downtrend. You're looking at whether or not, even if a T+2 clearing amount of time needed to take between the actual short and the clearing of the short, we're looking at 18%, which means a consistent plateau of that short interest. Remember, Volkswagen's short squeeze did not just bring Volkswagen from that 15% zone all the way to 15%. No, it cleared its short interest and it destroyed a lot of good families and people counting on the opposite, the hedge funds. So data from the brokerage Trade Zero America for the week ended July 23rd, and it showed it placed third among stocks trading at least $10 a share and getting sold short the most. Yeah, we just saw the data from the short side. A total of 14,000 short sale trades across Trade Zero's platform at an average price of $38.18 per share. AMC ranked number 2 for the weeks ended August 27th and September 3rd. So it looking like, in terms of just the ranking, in terms of just the general descriptive analytics, it's looking like not even that bad of a choice. AMC had faced stubborn upside resistance at the 21-day EMA, that exponential moving average. We have been watching that ourselves and making sure that you guys know Monday, coming back with a live stream. You guys do not want to miss it. That bell button is making sure you don't miss it. During the week ended August 27th, shares bolted as much as 40% higher for the week before settling an 18% gain. More than 695 million shares exchanged hands in that week, the highest since the week ended June 18th. AMC show a solid float, the number of shares freely traded on the NYSE of 508 million. Easy to just think about 500-ish million, because that gives you a general sense of how many bananas on the tree, how many shares that you could access without having a restriction on them or being private. AMC showed grand action on August 31st. The stock notched 8.8% rise in accelerating volume and marked its highest close since July 8th. And we also had a good look at that through Lux Algo. Gives us the buys and the sells. If you're taking a look at the fact that if you zoom out to whichever amount of time you're looking at, if you're looking at July, you got to look out to the hourly, you'll be able to see this, the crazy price action in June, where we got the strong buy signal a couple of days, if not a full weeks in advance, and then you would be able to also catch the latest sell signal. So Lux is still 20% off with the code ANGELMONEY. If it's helpful to you, that's a really helpful tip for me. Here it is, Q2 reaction. I think this is the most important part to be able to cover in terms of anticipating tomorrow's price action. In August 9th, a news release, AMC and Chairman and CEO, Mr. Adam Aron, a silverback himself, he noted the company raised another $1.25 billion in new equity across the quarter, right? Welcoming more than 22 million guests back into its theaters, breaking 2019 records. Hey, if it's a bounce stock you're looking for, AMC is looking pretty darn fundamentally strong, right? And if you guys haven't watched that Shang-Chi, tell me in the comments. Tell me in the comments which movies you guys are looking forward to, because there are a bunch coming out for the oncoming pumpkin spiced and boxer themed movies. Come on, check this out. AMC stock still a leader in the stock market today. So, given the extraordinary gains in May, is it time to take the profits off the table? After all, right, this is how the mainstream would like to be able to frame it. Take the profits off the table. This story examines fundamental, technical, and fund ownership factors determine if Leewood Khan Company with 1,004 theaters and 11,000 screens scores a good probability of making more money for stock traders. After Memorial Day, AMC soared 23% in an agreement to sell 8.5 million shares at $27. We know the story. Mudrick then was going to just dump all those shares, and then they really ended up being Fudrick because AMC skyrocketed directly after that. Our shorts covering AMC stock, we already saw the Ortex data, so we have a good understanding of exactly where that short interest is before. Remember the good old days where we were still waiting for that FINRA report to come out on the regular? I'm starting to get nostalgic. All right, making sure that you guys understand, since late January, AMC stock has followed an extreme zigzag path, that's to say it lightly. Just 2 weeks after the 2036 peak, AMC crashed. Shares fell as low as 5.26. Then came a huge second wave of buying, sending shares back into the low teens. And that's ending up an important question. What is GME, this phenomenon between AMC and GME, this retail boom? What exactly is that going to be able to say for future restrictions? And we're going to cover that really briefly because you guys made it to this part of the video. So we are going to bring back raffles, and you guys just got to one of the first opportunities to be able to win a raffle on tomorrow's live stream. On Monday's live stream, just comment out that you guys got to this part of the video, and I'll be picking one live on the live stream. Now, the financial services company got busted for not properly supervising Heath Gill, a 34-year-old MassMutual employee and YouTuber who by the alias Roaring Kitty. So now this is just a little bit of that background in case you needed to understand. That is one of the first people that just started to tell you what he understood, tell you the data that he was seeing, and interpret it in his way. Just like every other person who thinks that financial education is important should have the right to do so. I think it's pretty straightforward. Here's a bunch of other things about MassMutual by Keith. The most important part is what, after all this context, is exactly the take here. What is the main media trying to tell you? Direct target against retail traders. One individual investor spoke with Yahoo Finance, felt the fine against MassMutual definitely was a direct target against retail traders. At that point, he became an important martyr. Well, martyr in terms of getting to him, right? He got a lot of the pressure of people looking at him, people really counting on him, but also hedge funds getting the pressure on him. So he started to talk less. But not only is this now silencing individual voices in the market, what exactly is this going to say for the potential GME report that the SEC is coming out with, right? Because Abruzzo says that he trades stocks and sells stock market merchandise in his spare time. His employer isn't in finance. And you wouldn't be surprised if other employers, especially the ones tied to finance, would be very wary and likely institute more burdensome restrictions what employees can do trading-wise, and also on social media. So is this the very beginning of a state where people are not going to be able to do the exact same thing, cause the same revolutions, unite the same amount of people next time? You guys are living through one and only, and we'll see you guys in the future. For now, but not for forever, see you guys in the next one. Peace.